in this video we are going to see accounting conventions. So we have 4 conventions, that is consistency, full disclosure, materiality and conservatism. So we are going to see this one by one in the video. So before that, if you have not subscribed to our CAD NEST YouTube channel, please do subscribe and press bell icon for the notifications. So what is this consistency? So what is accounting convention? Well, let us going to see. An accounting convention refers to common practices which are universally followed in recording and presenting accounting informations of the business entity. So it is nothing but common practices, okay, of recording the transactions. Conventions denote customs or traditions or usages which are in use since long. To be clear, these are nothing but unwritten laws. The accountants have to adopt the usage or customs which are used as a guide in the preparation of accounting reports and statements. These conventions are also known as doctrine. So next, the first convention is convention of consistency. What it says is, convention of consistency means that same accounting principle should be used for preparing financial statements year after year. A meaningful conclusion can be drawn from financial statements of the same enterprise when there is a comparison between them over a period of time. So consistency means same thing should be followed, nothing but same, whatever the standard, whatever the accounting principles we have followed, that should be followed year after year. There may some changes we can do, but there should be not a financially overall statement should not be changed from year to year. This says there should be a consistency of what you are following the principles. So next thing, but this can be possibly only when accounting policies and practices followed by an enterprise are uniform and consistent over a period of time. So this is what, as I already said, there should be a uniform practice, that we should not change accounting policies, procedure from year to year. This should be same. Then if different accounting procedures and practices are used for preparing financial statement of different years, then the result will not be comparable. So if you want to compare result of one year to next year, when you have followed the same uniform accounting statements, policies, procedures, you can compare the data from 1 year to year. So but once you are changing the financial whatever the policies that you are following from year to year, you cannot change, you cannot compare the data. So for comparison also we need to maintain the consistency, it says. Then what is this convention of full disclosure? What is disclosure? Basically, disclosure means nothing should be hidden, nothing should be left closed. We have to open all the accounting details in front of investors. That is what it says, convention of full disclosure. So convention of disclosure requires that all material and relevant facts concerning financial statement should be fully disclosed. That means nothing should be hidden, everything should be disclosed. Then full disclose means that they should be full, fair and adequate disclosure of accounting information. Adequate means sufficient set of information to be disclosed. Fair indicates an equitable treatment of users. Full refers to complete and detailed presentation of information. Thus, the convention of full disclosure suggests that every financial statement should fully disclose all relevant information. Let us relate it to the business. So here we have an example. So we can relate it to the business now. So what it says is the business provides financially information to all the interested parties like investors, lenders, creditors, shareholders, etc. The shareholder would like to know profitability of the firm, while the creditor would like to know the solvency of the business. In the same way, other parties would be interested in the financial information according to their requirement. So I am an investor, I'll see the profitability. I am a creditor, I'll see the solvency. I am a bank, I'll see the performance of the business. So like this, different parties will have different interest on the business. So we have to provide all the detailed information to them. This is possible if financial statement discloses all relevant information in full, fair and adequate manner. So if you are giving everything in a full, fair and adequate manner, all the financial statements, then it would be good enough to improve the business performance. Then what is this convention of materiality means? Convention of materiality states that to make financial statement meaningful, only material fact, that is important and relevant information, should be supplied to the users of accounting information. So the question that arises here is, what is a material fact, right? So we are going to give information, all the relevant and important information according to the users, okay? But what is this material fact means? The material of a fact depends on its nature and the amount involved. So nature and the amount involved, both things is a material fact here. So material fact means the information of which will influence the decision of the user. So we are going to influence the decision. So to take up a decision, we are all the whatever the accounting data that we give are the contents for the user. So while giving information, we have to give adequate, as I already said. So now we have to give the adequate and also relevant information to the users to take up the decisions. So next thing is, so thus the convention clearly states that profit should not be recorded until it realized. So here we have after convention of materialism, we have convention of conservatism. Conservatism, what is this conservatism means? Conserve means what? We are going to conserve it. That means we are going to save. In simple word, we can say we are going to save some part of money for further usage. So what it says, let us see. This concept is based on principle that anticipate no profit but provide for all the losses. So it provides guidelines for recording transaction in the books of accounts. It is based on the policy of playing safe in regard to showing profit. So to show profit, we have to we should not show all the profit and we should not show all the losses. We have to do conservatism, like we should have the policy of giving some amount to the reserve fund, it says. The main objective of this conservatism is to show minimum profit. Profit should not be overstated. If profit shows more than actual, it may lead to distribution of dividend out of capital. So we have to give dividend to the shareholders. If you show over profit, we have to give more dividend. So in that case, we could not save money for the reserve fund. Okay, so this is not a fair policy and it will lead to the reduction in the capital of the enterprise. So when there is no profit, when you have to give the dividend, you have to use capital itself. So when you are showing actual profit, it is good enough to give the dividend. If you are showing more profit, then you have to use your capital, and in turn you will lose the capital of the enterprise. So this is all overly conservatism says. So continued, thus see, this convention clearly states that profit should not be recorded until it is realized. So we are expecting a profit. When we are expecting, we should not show it as a profit. So when it realized only, we have to show it as a profit. Okay, but if the business anticipates any loss in near future, provision should be made in the books of accounts for the same. When you are expecting a profit, that should not be shown until it's realized. But if you are facing any future losses, that should be shown in the books of accounts, so that the shareholders will get a clear picture of the business. For example, valuing closing stock at cost or market price, whichever is lower. So when you are calculating the cost of the closing stock, we are going to take at cost price and also at the market price. Comparing both, we are going to take only the lesser amount. So this is what we need in the books of accounts. So next example they are given, creating provision for doubtful debts. So we are going to create doubtful debts provision, that is also shown. Then discount on debtors will be shown. Writing of intangible assets like goodwill, patent, that should be shown. The convention of conservatism is very useful tool in situation of uncertainty and doubts. So when you have to show near future profit of near future loss you have to show, but near future profit you should not show, and you should make doubtful debts and intangible assets, any writing of is there, that and all you need to show, but you should not show the near profit of the business in the accounting records. So that if you show, you need to pay the dividend. That means we are not disclosing only loss and not profit. We are giving them a direction, we are giving them a clear picture of business, that we have a loss in future and the profit is not yet realized, that we have to show in the books of accounts and accounting statement for dividends distribution. Okay, so this is all about accounting convention. For more videos, do subscribe our CAD NEST YouTube channel and press bell icon for notification. Thank you.